Hello and welcome to Finance Walk. In this video, we will cover comparable companies valuation or relative valuation. Very important tool in equity research. Okay, see, first of all, why do we need relative valuation? Because we need to check whether the company which we are researching or analyzing is is very good as an investment comparable to other peers in the same industry. Okay, so going by this rationale, it's very important to compare a particular company in a particular industry with its peers based on some ratios or some valuation methods. So in this video, we are going to see some of these valuation ratios which are very important in relative valuation, and every equity research analyst must know about this. Okay, so this is table where we need to take first of all the company in question, that is Colgate, that we are analyzing. Then the other peers would be Hindustan Unilever Limited. Third would be Godrej Consumer, then Dabur India and Marico. Okay. And here we need some inputs like share price, then total shares based on which we will calculate equity value, then other data like cash, debt, preferred stock, minority interest, based on which we will calculate enterprise value. And we also need revenue for 2012. We will take estimate consensus for 2003 from certain websites, and the same with EBITDA. Okay, current or last year's EBITDA, and we will take consensus projection or estimates for 2013. Same with EPS. Okay, so projected revenue growth will be calculated here based on the formulas which we have put in. Okay, and we will check EBITDA margin and book value. So these are certain inputs we need for every company, based on which we can have values for comparison. Okay, so we'll start with Colgate. Okay, so there are certain websites like moneycontrol.com. Okay, so we'll go to moneycontrol.com first. Okay, so moneycontrol.com will give us data about share price and financials. Okay. Most of this data is available in paid databases like Provis, Capitaline, Bloomberg. So while working in company, you will have access to these databases. Okay. So we since we are researching on Colgate, go to this text box, type Colgate Palmolive India, select this. Okay, we have got data for Colgate Palmolive India. Okay, so first variable or value we need for share price is available here. Okay, that is 1167. 1167. It's in rupees. You need total shares in crores. Okay. Okay. Total number of shares you will get from either balance sheet or income statement. So go to financials, click on financials. Okay, here is data, balance sheet, profit and loss. Let's check whether in same balance sheet the uh, number of shares figure is there. No, it's not available in balance sheet. So we'll go to P&L, click on P&L. We need to be patient to download this website. Okay, fine. So here is income statement on or P&L and total shares in issue. Here is this figure. So we need to check whether we are checking the right year. Yes, it is March 12 and shares issued in lakhs, it is 1359.93. Since we need this data in crores, we will take 13.60. 13.60. Okay. So based on this, this data would be calculated. The total equity value would be share price into total shares. So total equity value would be 15,871 crores. Okay, we need this data for valuation purpose, so we'll keep it as it is. Now we need to check cash. Cash we can get in balance sheet. Okay, cash and bank balances 309.81. Since these figures are in crores, we can take this data as it is. Okay, so here is it is written, it is in crores. So cash and bank balance is 309.81 crores. 309.81. Press enter. Date, what is total date? Here is total date, it's zero date company. 0. Move to preferred stock, if any. Preference share capital, it's 0 again. 0. Go to next, minority interest. You will find minority interest in consolidated balance sheet. So let's check whether we have March 12 data for consolidated balance sheet. Okay, unfortunately, we do not have data for March 12. If there is any minority interest, then you can take from that value. But I guess it would be 0 because it's 0. If you check minority interest figure for last 5 years, it's 0. So we can safely take it is the value is 0. Okay. Now we will get enterprise value. Enterprise value is nothing but if you check equity value minus cash plus debt plus preferred stock plus minority interest. So in this case the total enterprise value would be 15,561 crores. See, enterprise value is important if any acquirer would like to acquire this company, and this ratio, or I would say value, is very important in mergers and acquisitions. Okay, so this is how this enterprise value is calculated. Okay, fine. So next point is revenue. Okay, so revenue for 2012 is, go to P&L. Okay, uh, go for consolidated figures wherever possible. Check whether we have consolidated figures for this company. No, we do not have data for consolidated, so go for standalone. On some websites you will find consolidated data, but here for calculation purpose, representation purpose, I'm just taking whatever data is available here. Okay, so sales turnover is 2805.54. 2805.54. Now, if you want to check this data with other sites, other available sites like Reuters India, go to Reuters India website. This will give you data if the data which is not available on Money Control. So let's check whether we can get this data on Reuters India. Okay, so search news and quotes, go to this text box and put your company's name, that is Colgate. Click on Colgate and this search box. Okay, so here is the link for Colgate Palmolive India. Click on this link so that we'll get data for Colgate Palmolive. Okay, fine. So we are now on Colgate Palmolive India's page on Reuters India. Okay. So if you want data for last year's sales, so go to Financials tab here. Go down and check whether you have data for last year. Okay, so unfortunately you do not have data for last year here. Okay, fine. So consolidated figures are not available. Okay, so that's okay. Revenue for 2012, so we need to take this data from money control only. Go to moneycontrol.com and the figure is 2805.54. 2805.54. For 2013 expected. If you want estimates, then you need to go to Reuters India. Here the data is available. Sales in millions, it is 3079.6 million. So that means you need to take March 13 mean figures, that is 3079.6. 3079.60. It would be in crores. Okay. Go to EBITDA. For EBITDA, you will get this EBITDA on money control. Okay. So EBITDA is this figure, earning before interest, tax, and depreciation. It is 628.55. 628.55. For 2013 EBITDA, we will estimate it based on the ratio that means relation of EBITDA to revenue. So here for 2012 EBITDA is 629 divided by 2806, that is revenue in 2012. We want it in percentage terms, so put percentage, that is 22%. So 22% was the figure of EBITDA in relation to revenue. So 22% of sales was the figure of EBITDA in 2012. So we will take this same figure for 2013 also. So 22% of 2013 revenue. 678 would be EBITDA for 2013. Okay. For EPS 2012, last trailing 12 months or 2012, if you want, you can go to either you can take trailing 12 months or you can take the figure for 2012. Okay, so earnings per share for 2012 was 32.83. 32.83. Okay. For 2013 estimates, as I said, we need to go to Reuters India. We will get this figure on Reuters India. This is earnings per share. And year ending March 13, we will get mean, that is 37.76. Take this figure, 37.76, enter. Okay, so projected revenue growth would be 9.8%. This is projected revenue growth, 9.8% is projected. EBITDA margin is 22.4%, which we have taken here, 22%. And then we need to take input as book value. Book value will get on money control. Book value is available here, 32.02. So take this figure, 32.02. Okay, so we have taken data from money control and Reuters India. In some cases, you can check Rediff Money also. So these are some of the websites which give you free data, free financial data on Indian companies. And likewise, we have done it for one company, that is Colgate. You need to do it for every company, that is the peers, different peers, that is HUL, Godrej Consumer, Dabur India, and Marico in this case. Okay, so this is data collection part, and okay, so after collecting data from different websites for these peers, this data will look like this. Okay, so I've already collected this data from different websites. Okay, total shares, then equity value, then cash, date, preferred stock, minority interest, enterprise value, revenue for 2012, 2013, EBITDA for 2012 and 13, EPS, and projected revenue growth, EBITDA margin, and book value. I've done it for 1, 2, 3, 4, 5 companies. When I get this data, I'm sure that the peer comparison would be easier for me. Okay, so these are the inputs. Here are the valuation statistics. So company are the same: Colgate, HUL, Godrej Consumer, Dabur India, and Marico. I've taken share price here, enterprise value, which I have taken from this sale. Then price to book value ratio. Share price is this, and book value we have already taken it here. Okay, so EV by EBITDA. This, as I said, this is one of the important ratios in valuation of M&A, and also in sometimes in DCF. Then EV by revenue and PE multiple. Okay, so you need to check these valuation ratios for every company whenever you are doing comparable company valuation. Okay, so how EV by EBITDA is done? EV is taken from this, and EBITDA is taken from this figure. And for 2 years, 2012 and 2013, is calculated. Same with EV by revenue, enterprise value divided by revenue. Okay, and PE multiple, price divided by earnings per share. So earnings per share is this figure. Okay, so PE multiple is very important. So main important criteria in comparison of these companies is this company should be comparable, like they should be in the same industry, or they should be in the same level of value chain, and either their sales or the size should be same. So share price varies. Then enterprise value, you can check enterprise value. Hindustan Unilever's enterprise value is highest, followed by Godrej Consumer, then Dabur India, Colgate, and last one is Marico. Okay, so if someone or some company wants to acquire one of these companies, the acquirer would need to pay this much for acquiring any company. Okay, price by book value. Price by book value is very important ratio. That is how many times of book value the market is paying. For example, if you check this, Colgate has the highest multiple, followed by HUL. The least is Godrej Consumer. In this ratio, I can say Godrej Consumer is undervalued, but we need to check other ratios as well. Okay, EV by EBITDA. This multiple is very important. It works like P by E, or see EBITDA PE. If you check the numerator price is given by market, and EPS is what the company earns. So this is basically per share wise, but EV by EBITDA is done enterprise way. Okay, so if you check this, the highest one would, again I would say, the overvalued thing. In this case also I would say again the Godrej Consumer is undervalued. Okay, so look at these ratios. See, the lower the better in this case. Again, you need to compare it with industry. See, if EV by EBITDA is let's say 10 times, 10 times, and if you want to check, if you reverse the ratio, that is EBITDA by EV, so it will give you the multiple, which is and this. Okay, so 10% is what acquirer would earn if it invest in enterprise value. So always check from this angle: the higher the enterprise value or enterprise value multiple, the lower the earnings capacity the company will have. So any acquirer would check that into account. Next ratio is EV by revenue. Again, EV by revenue, I would say it's good for Godrej Consumer. Here, Marico is the lesser one. Okay. Next multiple is PE. Okay, so PE is the highest or most popular, I would say, multiple or ratio, valuation ratio in for any country, in any stock market. So PE multiple, you need to know PE multiple of this company for 2012 and the estimated PE multiple. Okay, so in this case, I would say all these companies have almost the same PE multiple in the range of 32 to 37 or 38. So this is quite okay. I wouldn't say any company is that attractive right now, because even if you check this company's PE multiples look in the same range. They might have different business terminologies or other value or other valuation ratios might be different. Okay, so we have taken 2013, that is estimated PE. In this case, the 28.93 or 28.53 Marico would look attractive. Okay, so this was about comparable companies analysis or relative valuation in equity research. I would say this, if you can do this with DCF, then that is more than enough for valuation purpose. Okay, so that's all for now for this video. Thank you.